Palantir just reported this morning, guys. Now, if you've watched our channel, Palantir is kind of an interesting one because over a year ago, there's a YouTuber out there who knows nothing about finance and money. And he kept talking about Palantir being amazing at $40 a share. And I said, you're wrong. Palantir is not good at $40 a share. Guys, the way I look at investments is it's the present value of all future cash flow. Right, Mo?
Absolutely.
Okay, so the future value of all the cash flow, paying $40 a share for Palantir did not make sense to me. And I at the time said like $5 a share. Mm-hmm. Well, it's currently in the $7 range. $7.78 as of right now. It's down about 2% today. They just reported earnings. They lost 6 cents per share versus an expected 5 cents per share, okay? They reported $477.9 million in revenue versus $474.7 expected. U.S. revenue was up 31%. U.S. commercial revenue was up 53%, and that's what Mo loves.
That's the number I like. I like that they have more, they're relying more on that. Actually, well, let's see what his title is actually, but he basically said they're using the government to get them going, and then this commercial side is going to really escalate them.
Yeah, so Palantir, basically their goal is they're basically using your data to solve problems. I know that sounds generic, but they're all big into data, right? They said recently that they are involved in everything that's going on in Europe. They wouldn't get very specific, but they're helping a lot of governments with what's going on in Europe to take the data, analyze it, and come up with the solutions they need. U.S. government revenue is still up 23%, even 53% increase. Now,
that's great.
Some of the benefits of Palantir that I like. It's the 8th quarter in a row of free cash flow, positive free cash flow.
That's not something we were talking about a while ago.
Yes. I mean, granted, last year was still 2 or 3 quarters in a row. But this is the thing for me. Like, if I don't understand how the company is going to make money, I can't understand how they're going to lose money. But now that we're seeing the glimmers of hope, yes, they still, on an earnings basis, lost money per share, but free cash flow has been positive for 8 quarters in a row. Mo, you ready for this one?
Yeah.
They have $2.4 billion in cash and 0 debt.
That's incredible.
It's very, very difficult to go broke when you have 0 debt and $2.4 billion in cash. And their revenue is about $2 billion a year, right? I think they're expecting next year $1.9 billion or 1.9 for the year.
1.9 for the year. Yeah.
Guys, they have $2.4 billion in cash. So now that Palantir has fallen a lot, I'm getting very, very interested in this company. Now, I do believe that the NASDAQ and the S&P is overpriced. Here's my stock market to GDP ratio. I have it as 58% overpriced going back to 1929, which is expecting not a good return in the future. So am I trying to time the market? Maybe. I have sold puts on Palantir at a lower price than today. And I will continue to probably sell as long as this thesis keeps going. And what's my thesis? They're going to keep very low debt levels with very high cash on hand, and their free cash flow is going to continue to get better, and their earnings will continue to get better.
My hope is that they stay on that path and not at some point say, okay, let's take on tons and tons of debt and kind of go grow this thing. I hope that doesn't happen.
I don't think that's going to happen because, a lot of tech companies keep very, very low debt levels. They're able to generate really high margins. So the question is, why take on debt? Like, why are you going to take on debt if you have
especially in this environment of interest rates?
Yeah. And
so this is almost like a deterrent. Don't go do this. It's not free money anymore.
Correct. When you're borrowing at 3% or 2% for 5-10 years, okay, I can understand it.
Right.
But I look at this thing to myself, okay, so let's look at Palantir using our 8-pillar process because it's something that I really want to check out. So here's our 8 pillars. Not enough data. All right. We like to have data going back 5 years for our 8-pillar process. So here it is going back the last 3 full years. 900 million, 1.3 billion, 1.74 billion in revenue. The only issue I have here, look at these shares outstanding. Yeah. The shares outstanding are increasing a lot, but now that they're free cash flow positive,
maybe they stop.
Hopefully this starts to go back to the way, they're really growing the revenue. I mean, guys, US revenue total up 31%. I mean, this is like, okay, this has a lot of potential, and data is the future. I keep hearing people say this. The data is the new commodity, right? Now, whether that's true or not, it's a cute thing to say, etc. But Palantir has been around since 2003, created by one of the smartest men out there, Peter Thiel. He's the one that created PayPal. He was partners with Elon Musk. Love the guy. Brilliant man, libertarian, was 1 point shy of becoming a chess master. I think I looked him up and it was like $21.99. And all you have to do is get to $2,200 to become a chess master. So why he stopped, I don't know. But I look at this company And I want to look at the analyst estimates. I mean, guys, they're expected to make 6 cents this year, according to 18 analysts, and $1.60 in 2026. So let's say in 2026, they do hit this. And this is analyst estimates. You assign 20 times. And the reason 20, it's still gonna be a fast growing business then. This is a company that could be justifying $32 a share. Now, do you understand why I don't believe in $40 a share for Palantir? Remember, I'm not for or against many companies. I'm for or against the valuation. Now, look at a company like Peloton, who that financial moron also talked about. Peloton, I could never come up with a value for. I didn't know when they were going to make money, how it was going to happen. I just couldn't get it, so it was too difficult for me. It went from 180 down to $9. It's at $9 now. Guess what I think?
I still don't know if I could pay $9 for it.
I don't know how to. Yeah, so I just avoid it completely. But with Palantir, I see this path to profitability. Look at this revenue growth here.
That's incredible.
Well, yeah, revenue growth of mid-20s% for 5 years. So let's go in here and use our stock analyzer tool to look at it and say, okay, now I'm going to ask Mo here to give me his assumptions. And we use the stock analyzer tool to see a future value for the business. It just basically is a model. What you put in is what you're going to get out. So if you put in garbage, you're going to get garbage out. My goal is to make 3 assumptions: a conservative one that's the middle, kind of what I think is going to happen, and one is the high one. I tend to follow analyst estimates for the high level. Okay. That's what I tend to do. Why? Because I think analysts tend to be a little optimistic about things when times are good. So Mo, we're going to do a 10-year analysis.
10-year analysis. Okay. Maybe 22% on the high side.
Okay.
18 middle, 14 low. 14
I love it.
Too low?
I love it. No, I think it's great because I do think 14 is too low, but that's the key here. Let's be lower than we think. I think 18% is a very reasonable number. Okay, profit margin. Now, considering we don't really have...
It's a hard one.
Yeah.
15%.
I like it. What's their gross margin, Mo?
78.7%.
Yeah, I mean, it's a very high gross margin. So as they drive more and more revenue, they're going to drive more and more to the bottom line, even if they especially if they keep their overhead the same. So I think this is a company. I mean, look at Microsoft. Their gross margin 68%. Yeah. Right? So it's lower than Palantir.
Right.
So I think 15 is a very low number. But remember, they're not at cash flow. They're not at earnings profitability yet, so it's going to take some time.
15, 18, 21.
See, I think that's low, Mo.
Oh, really?
Yeah, I do.
15, 20, 25?
I was actually going to say 15, 22 and a half, and 30.
Wow. Okay.
Because Mo, look at it this way. Are they going to have 47% of their revenue being overhead? Probably not.
No,
and that's what I think here.
Yeah.
Now, I think in year 10, their bottom line margin will be higher than this.
Okay.
But along the way, it's going to have lower margins to go up.
Okay.
That's why I think that.
Okay.
All right, free cash flow margin.
Should we make it? Actually, they do have free cash flow now.
They do. But I think it'll all equate out over time.
Yeah. Okay. Make it the same.
I agree with
because
that.
we're doing 10 years.
All right. Now, PE and price of free cash flow. Now, remember, guys, this asks you for what's the PE going to be in 10 years. It's still going to be a company that's growing, but let's say it does 22.5% revenue growth for 10 years.
Okay.
It's going to do what? Let's call it $2 billion today. That makes it a $14.6 billion revenue business in 10 years, which isn't some insane number.
Reasonable.
Yeah, it's reasonable. So does it still have growth potential from there?
I don't know.
I would think so. But again, give me your PE assumptions, Mo, for 10 years from now.
15, 17, 19.
I like it.
Same for price to free cash flow.
Yep. And your desired annual return. Now, guys.
Now, for me, I'm going a little higher on this one.
So that I agree with Mo. Your desired return is essentially your margin of safety. What return do you want for these assumptions? Now, the higher your assumptions, the higher your desired return should be. Now, we've already been conservative here. So I think our desired return should be lower here. However, this is still a young company. Mm-hmm. It still has a lot of things to get through, right? So Mo, what is your desired return numbers?
I'm going to go 16, 18, and 20.
Wow. Okay. I like it. I would have done 15. It's basically the same thing.
Yeah.
So the stock is currently at $7.78.
Okay.
Now, whatever these numbers come in at, if it's all green, it doesn't mean go out and buy. It means go do more research and make sure all of these assumptions are reasonable assumptions. Guys, if it's all green, the goal is to sit there and say, if I had 100 opportunities to buy companies like Palantir with this future, this valuation, would I do it? Now remember, they have no debt. They have $2.4 billion in net cash. That has to be factored in there as well, because this stock analyzer tool does not factor in the balance sheet.
Yeah.
So, analyze button.
I'm excited to see this.
A low of 276, a high of 850, a mid price of 5. Okay, so what this means is if your highest assumptions are true, you should pay about $8.50 per share, and you're gonna get about a 20% return if everything turns out to be true that we assumed above. On the low side, but I think the low side's very conservative. Middle side, guess what? Spoiler alert. This is about where my puts are sold at.
Yeah.
And I said back in the day at $40 a share that I'd be interested around $5.
Yeah.
And I'm not saying that it's just going to always change, but here is where I stand. So if you like this and this makes sense to you and you're a new watcher, do me one favor. I just need you to subscribe to the channel because we do 2 or 3 videos a day. And during earnings seasons, we do 3 or 4 videos a day. And we do them within half an hour of the announcements. So guys, subscribe. You will not regret it. You'll watch 4 or 5 videos and be a lot smarter when it comes to money.